Hi, everyone. Welcome back. We're here to cover live the ECB Monetary Policy announcement. I'm here with Yohay Elam from Forex Crunch. As usual, we're going to walk you through the announcement and, of course, the backup of the FXStreet.com team. Sorry. Hi, Yohay. How are you?
Hi, Valeria. I'm doing great. Let's see if we have some fireworks today from Draghi.
Oh, yeah. I don't know. The market is too focused on the September meeting waiting for fireworks, right? I don't know why, actually, but that's what markets believe is today, that we are not going to get much from Draghi today, and we are going to get a big tapering announcement during the September meeting, the next one.
Yeah, well, in September they're going to publish new forecasts like they do every 3 months, so this is sort of an in-between meeting. And perhaps another thing is the Jackson Hole appearance. At the end of August, Mario Draghi is going to this central bank feast in Wyoming in the United States, and there he might give us a hint towards something here.
Yeah. Anyway, I was thinking that Draghi, I'm sharing my charts now. I'm thinking that Draghi never liked a strong euro, and all of these comments he made, if he's optimistic, if he says we are doing good, everything run against his will of keeping the euro weak, right? To keep on growing, for the region to keep on growing. So I was thinking that he has to balance a lot his words, and even though any positive comment today could be taken as a euro buying trigger, right?
Yeah, so according to some analysts, the ECB is expected to remove some of the dovish tone. That means they will close the door on raising QE, either by extending the duration or by enlarging the size, like they did with lowering interest rates last time. So that will be a very small hawkish hint that they're not going to add more QE. It doesn't mean that they're going to. It's not an announcement of tapering, which will come only later on.
Okay, we are not expecting changes anyway in rates right now, guys. So most of the attention, we may have some spikes now, but most of the attention will turn to the speech around 4 to 5 minutes later. And remember, we have a bit of delay, so you will see market reaction first in your charts, and then hear our comments on it, right?
Exactly. Always. We have less than 1 minute to go.
Yeah, less than 1 minute to go. So here we are waiting for the announcement. The euro is struggling with the 115 level, but still quite positive long term.
So yeah, we'll talk about. Okay, any second now?
Yep.
Again, no changes expected. Yeah, the ECB leaves the interest rates unchanged. I don't know why Eurodollar is ticking a bit, well, 5 pips lower. Okay.
Yeah, the Swiss is going up. Maybe the Swiss National Bank is playing around and without letting us know as usual.
Yeah, let's see if we get some additional comments. When they do make changes, they tell us in the rate decision that in the press conference they will give us more information. This time, I don't see anything.
Okay, as I said, the euro is easing now at 1480 and counting, since it's going its way down. Dollar got some love overnight during the Asian session as the Bank of Japan leave its monetary policy on hold, but delayed the timing. They're expecting to reach the 2% inflation target by almost a year to the 2019 fiscal year. And that's a bit of helpful for the greenback today, because stocks are also trading higher after the announcement, but pretty much that's it. And you can say the market is favoring the greenback because what we are seeing also in pound, right? It broke lower despite retail sales came better than expected in UK. Anyway, I don't know, Yohay, what's your take on pound? My take is that we are going back down in here, calling expectations for a rate hike and uncertainty surrounding Brexit are too tough for the pound buyers to deal with. What's your take on pound?
Yeah, I'm also bearish on pound. Today we had actually good figures from the UK. We learned that retail sales advanced more than expected, bounced more than expected, and upwards revision. Good news. The good news helped the pound for about 20 minutes, and that's it. So it's also what you mentioned, the US dollar is making a correction after the big falls earlier this week. But in general, I think the UK economy is not going in a good direction. Brexit is beginning to bite. In 2017, we had weak growth in Q1. We'll get next week the growth figures for Q2. Retail sales today, they were okay, but in general, they were weak since the beginning of the year. Standards of living are falling. Some companies are beginning to move outside the UK. I think all in all, and the election results also weren't positive, left to hung parliament. So yeah, I'm a bit bearish on pound dollar, on the pound in general.
Anyway, we can say that the weakest currency is still the greenback, of course, right? Across the board.
This week,
yeah. But well, the pound is the one that follows through in weakness, I mean. And I'm still seeing the Aussie and the Japanese yen as the strongest, followed by the CAD, which is benefiting from steady recovery in oil prices. We are going to have an OPEC and non-OPEC meeting these days. I'm not sure if it's next week. And there was a call for an extra meeting from the OPEC last week, but I forgot to check out this one. I believe it's for next Monday. We're planning to meet.
Okay, I think I believe they will not announce anything because, at least for now, the price of oil is back up to 47, almost 50, which is around the normal ranges. It's away from the danger zone. So I think if the OPEC and non-OPEC members are not under pressure, they do not act. So.
Okay. Anyway, what are the levels you are following in our friend Eurodollar?
Let's.
I have this huge 1460 level. This is a weekly chart, as you can see in the weekly, and it's also easy to see in the daily. Ever since January 2015, right, over 2 years and a half, bear has been unable to settle above that level. We have a couple of spikes, one up to 1713, the other up to 11615, right? But as you can see in the chart, they were short-lived, right? So this price zone around 1460, 1470, 1450 is a huge long-term resistance. It was now support, right? So I'm not expecting the pair now to break below it, but with Draghi, if Draghi is not really euro bullish, if the pair loses this level, then there's scope for further declines. Still, and in the wide view, right? This 1219 level, which was June 28, if I'm not wrong, low. Let me find it. Yeah, there. I believe it's this one. Yep. No, this one. Yep, there. As long as that 1290 level holds, the risk of a more sustainable decline is quite limited, right? I could go bearish in this particular pair only below this level. We're over 200 pips away, so I'm not sure if today will be the day. But anyway, those are my main levels for this pair.
Yeah, I think Eurodollar now better reflects the situation, which is economic growth in the Eurozone is better than in the US. Politics look much more stable, especially after the French elections and with all the mess around Trump. And there is, we can just talk about Trump for hours, but it doesn't move. Well, this week it did move markets, the healthcare bill, but everything is more favorable for the euro. Now, the problem with this is the ECB is also going towards tapering, and the Fed is hesitating. The problem is Draghi doesn't like it. He needs a lower euro for better exports and and higher inflation. And he cannot say the situation is bad because growth is good, but inflation is a bit lagging behind. So that's his sort of balancing act. And I believe he'll try to drag the euro down just to keep it low for a bit longer until they announce tapering. On the other hand, is it already priced in? Is it dovish Draghi priced in? We did fall from the highs of 115.80 to just under 115. So hopefully we'll get some action. But the lines you mentioned, I'm looking to the upside 116.20 and 117.10, the highs of 2016 and 2015. And to the downside, a very, very big level is 113. But looking more closely at the more recent high of 114.45. So hopefully we'll not just be around 115 hugging it for too long. We'll see some more action.
And what's your take on the yen? Dollar yen, I mean, right? I'm following this latest weekly advance, right? The fact is that does not look much promising towards the upside, despite Bank of Japan, and despite the imbalance between both central banks, right? Because in this particular case, it seems that the Bank of Japan is far, far away from tapering, far, far away, and even late, as I said earlier, the timing of inflation reaching 2%, and even though the period it's under pressure, no doubts, and looks likely bearish, right? Today's recovery has been quite shallow and stalled around 38.2% retracement of that rally, meaning it's not looking good for the greenback anyway.
Well, technically, I'm looking at this uptrend, more support than channel here. I'm showing now, I think we had a very, very nice rise from 108.80 to even above 114.30, 114.40, but it couldn't keep riding this tiger, and eventually we had a drop. Weakness of the dollar is stronger than the Bank of Japan's will to push the yen lower, and I don't think we'll break out of the wide range. I think we'll stay within the 108.10 to 114.30, but currently I think there's more room to the downside within this wide range. So because of US dollar weakness.
Yeah, our friend Trump, it's doing a lot to keep the dollar down. Anyway, you're sliding, right? Pressuring the daily low. Remember that around that 1460 area, the price is tending to stall and consolidate. So that's the most we may see before Draghi. And then Draghi will decide whether we are going to bounce from that level or break it lower, or maybe not.
Had a big break earlier this week, I think. Well, not only in the euro and also in the Australian dollar.
Yeah, that was a very impressive bullish breakout. But we approach 80 and retreat. I guess it's some profit taking ahead of the events we had today, but even a mixed employment reporting year as full employment growth, but partial employment was very, very low, right? Employment report released overnight, and that was what hit the Aussie partially, and some profit taking, as I was saying. But as you said, it's still bullish. It's still with room to go. I'm looking for the last year high. I'm not sure. Around 28.35 or so. Yes, 34. So as long as above that level, the risk of a bearish move seems quite limited for me. Also quite relevant high from previous, not only last year high.
We had early in the week, very early, Chinese GDP, which came out slightly above expectations. And more importantly, we had the hawkish meeting minutes from the Reserve Bank of Australia. They talked about raising rates towards 3.5%. But that was the big driver. And yeah, the employment report today was just not good enough to keep the momentum. It wasn't that bad. It was sort of as expected, but I think the market was bracing itself for some profit taking after this, very impressive move to the upside.
Okay, long waiting ahead of Draghi, but here we are. If you have questions, comments, ideas to share with us, they are welcome. So let us know.
I think also in the Canadian dollar we have sort of some profit taking, no? Or sort of
still quite bearish. The dollar can also multi-month lows.
Right.
Yeah, the rate
also a huge move there.
Yeah, the rate hike a lot for that. Keep in mind that the US will release a couple of reports alongside with Draghi starting his speech. So maybe we are going to see a bit of spikes here and there, but try to ignore them. Let's wait until the market adjusts Draghi's word. I was thinking that earlier this year when Trump promised the tax reform, promised an infrastructure investment, and the market was all enthusiastic about it. And well, then things cooled a bit down when they said that the tax reform will be passed through the Congress on summer. And now we are here, we are in summer. And all about we are taking care of is the open air rejection bill being rejected. So do you have anything what could happen with that tax bill?
I heard, saw a report in the New York Times that they might water it down. They might go for a less ambitious tax plan. Maybe not lowering the corporate tax rate to 15%, but maybe to 20, 25. So sort of moving ahead with some kind of tax reform, but not as ambitious as they promised and not as ambitious as markets want. So I don't know if that will happen. I don't know if that will happen quickly. That's also a very complicated matter like healthcare. And it's just they have full control of government, the Republicans, and they can't manage to agree on something among themselves. So
yeah, yeah, that's what I was thinking. That's not good news for the greenback either, in the long run, right?
Yeah, what happens if? I think infrastructure is totally off the cards, and maybe I don't know.
It's terrible, but none of us
know.
News,
yeah. The good news is if they don't do anything on tax reform and healthcare and infrastructure, they might not do anything about trade, and that could be negative. So just just keeping things unchanged and letting the economy run. It's the same slow growth. Eventually politics, well, in the past few months, we've seen how politics has less and less impact, and I mean, US politics, only from time to time.
Okay. Times goes by slowly when the market is quiet.
Yeah.
Don't get desperate. We are here to cover it. We are here to go with it. Pound has still room to fall at these levels. For me, the support, key support was the 960.70 region, which is already broken. So now it's immediate resistance area. I'm looking for the 29.20 level now, where buyers have been defending the downside in the previous weeks. So that's the level to take. Below 29, I'm seeing further declines and probably a retest of this low around 28.10. So those are the levels I'm watching here towards downside. I guess the market will now attempt to sell on spikes beyond 130. So beware of that. And remember, the euro will react to the ECB and the gold will follow through probably. But the rest of the market will probably ignore the news unless we have some wide movements in the euro, right? And anyway, that could probably be the pound moving in the opposite direction because of the euro pound plummeting.
This week, I think the ECB is the main dish of the week. After this event, we only have tomorrow Canadian inflation and retail sales numbers. Next week, we have the Fed decision. Also, not without a press conference, without forecasts, but do you think it'll move markets?
The Fed? Not really. Not this time, unless they, I don't know, they surprise us with an unexpected move, but the market is not expecting anything until September now. Also, so seems unlikely that the Fed will move the market. In fact, I do believe that it has more chances of pressuring the greenback because of inaction than favoring with a surprise announcement.
Yeah, so
Quiet,
Fed.
Too quiet, I mean. Market is too quiet.
Yeah, well, we did have some action at the beginning of the week with the big breakouts of euro dollar and Aussie dollar, last week with the Canadian dollar.
Yeah, we need confetti today in the press conference.
Oh, yeah.
Let's see how Draghi starts the press conference. We can tell if he's going to be hawkish or dovish just by looking at his face when he gets into the meeting. He can't hide his feelings. Because the market is not expecting much today, as you said. Market is probably anticipating some dovish comments from him. So beware of any hawkish, positive, optimistic wording, because that could be a game changer, at least short term, right? Moreover, as the euro is so close to that key support for me. But hey, 30 minutes, 24 minutes to go.
Yeah. For those of you who aren't aware of the confetti, let's see if I can find an image.
That would be great.
Yeah.
Yeah.
No, I can't see his face.
April 2015, over a year ago, yeah, a lady in the middle of a press conference and throw confetti over Draghi, interrupting the press conference. It was quite wild.
Yeah, Josephine Witt. Here's a picture. Anyway.
What kind of security they have?
I guess they improved since then, but...
Yeah. What happened if she had a gun instead of confetti?
No, I think they did screen her. They screen everybody for medals, but
yeah, I know.
It was only papers. So.
Yeah, she passed through.
Anyway, the euro dollar is pushing a bit lower, 114.80, but not going anywhere fast.
Nope. The dollar Swiss is up. The pound is also at fresh daily lows. A couple of pips on the yen and the Aussie, which are the strongest against the greenback, are still reluctant to just consolidating really, really tight ranges. Same happens with gold.
Yeah. Regarding the Fed next week, I think markets will be obsessed with one question. Is low inflation transitory?
Yeah.
That was the key wording in the June press conference. Yellen specifically singled out prescription drugs and wireless charges, saying that low inflation is only transitory and that all in all, inflation is set to rise. Since then, we had another set of inflation figures on Friday, and they weren't good also this time. So who knows? Maybe they'll change their mind about that. That could send the dollar down. But if they probably will not change anything for now, just say that everything is the same, and that should keep the dollar stable.
Yeah, one of the things that maybe under the radar on next meeting will be the pace of hiking, right? The Fed anticipated 3 rate hikes for this year. It already delivered 2, but somehow the market is obsessed with a 4th rate hike, right? So I keep on reading analysts and news from big newspapers saying that, well, the dollar is falling because there are no chances for a 4th rate hike this year, right? So it's a bit unclear why the market decided to go for that 4th rate hike. Why the Fed just promised 3, right? And what's actually happening is that, as you said, lower inflation is cooling down hopes, right? But actually, the Fed is delivering as promised. It's true that despite the slowdown we have seen in the U.S. economy since the year started, the economy is in better shape than what we had, 2, 3, 5 years ago, right? Much better shape. And the progress keeps going, employment remains strong. Inflation is a drag everywhere, except in Latin America, of course, but it's a drag everywhere, right? So I'm not sure when the market decided that the Fed could offer a 4th rate hike. And the other thing that I was thinking of is that in her testimony before the Congress last week, Yellen said that they won't need to hike much more until reaching what they think it's the neutral level, where rate hikes won't affect the economy, right? That's what they call a neutral level. Not sure which one is for the Fed, but maybe 2.5, 3%. At least that it was a year ago. Now not sure, but that's a drug. I guess that's a drug, but not the fourth rate hike never promised.
Yeah, I think they'll probably raise rates in December. Well, if inflation remains this low, no. And they'll begin with the balance sheet reduction in September. But I think, yeah, probably we won't get any news next week. But in Jackson Hole, towards the end of the month, towards the end of August, sorry, and we'll get some maybe a hint towards the move in September.
Yeah. The reduction of balance sheet is also relevant. So any comment on that next Wednesday should bring some action to the market, because so far they said sometime this year, but we have no clear details on that, not about the amount or the timing or anything. So any clue on that could be a big market model. Okay. Still waiting for Draghi.
Yeah.
Still hoping he offers some interesting headlines for us to trade.
He might be a bit snappy with reporters. He does that from time to time, but doesn't mean he'll move markets. He might. So.
Hi from the chat is saying Draghi will speak more than he should, as usual. As always. When is the press conference starting? Well, the press conference is starting in 16 minutes. So we're going to have it here to you make comments on it if something relevant happens.
I was I'm still, I think, expecting him to try to lower expectations, to keep their communications, not to get markets too excited, not to push the euro too high, and also not to push bond yields too high. On the other hand, well, since yesterday at least we're the peak. This week we're already 100 pips down, so maybe it's already priced in. Maybe dovish Draghi is priced in.
I don't know. Yeah, I would think that if he tries to be dovish, he would be like cheating us, right? Trying to convince us of something that is not real. So the market won't believe him. That's my personal view, of course, I'm sharing it with you. And so the market won't believe him and play against him anyway. Another thing that I'm thinking is that the market is just waiting for an excuse to buy the euro, and any positive wording he may offer would be that excuse the market needs.
Yeah, trended to the upside. That's.
Yeah.
I'm looking at a 30-minute chart now, but if I zoom out, weekly chart, clear upside. Yeah, sorry.
Yeah, no, exactly. That's what I wasn't. Oh, sorry. That's what was I was. That's what I was going to say. That despite today's dollar strength we are seeing across the market, the fact is that the trend is upside. This is just corrective so far, quite shallow considering how much we are rallied straight, or pretty much, right?
In the last press conference, he had the opportunity to be a bit dovish because inflation figures were falling a bit. So back in May, we had core inflation falling to 0.9, and in April it was 1.2. So he had a reason to say, to be frustrated actually about inflation, saying that core inflation hasn't changed too much, and sort of wait and see mode and things like that. This time, well, core inflation is back up to 1.1, and we have more signs of growth in the Eurozone. So as you said, it'll be hard for him to fake strong dovishness.
Exactly. Remember, guys, we have a couple of minor reports in the US alongside with the press conference starting. So maybe the market will see a bit of action, limited one, but we need to wait until it make up its mind, the market make up its mind after Draghi.
So we have around 13 minutes to go.
Yep. Less.
Is it held in their headquarters once again in Frankfurt? I think last time they were out of town. I think so. I'm living in Barcelona. A few years ago, they had their ECB meeting here in Barcelona, and there was so much security in town. It was,
Really?
Yeah, and the meeting was held in some conference center outside the touristic area of town, but still in touristic places were just full of police. And anyway, hopefully we'll only have action in markets, not with security. Meanwhile, pound dollar is recovering just a bit. Not going anywhere.
Not going anywhere. Yeah, that 29, 60, 70 price zone is for me the level to regain. So as we can see for the pound recoveries. But as we said earlier, the fact that the inflation retreating, right, gave the Bank of England an excuse to remain on hold in rates. Was a big hit for pound bullish run. Market was speculating that the Bank of England will have no choice but to raise its rates because inflation running too fast. We have June readings easing a bit. Still, inflation is too high, and with a huge divergence with wage growth in the UK. So the risk is still there, but at least the setback we have in June inflation is somehow backing what Governor Carney always said, that well, they will tolerate with inflation running above the 2% inflation target for a while, and that they were actually expecting that with the Brexit uncertainty. And pretty much that's it. Somehow he confirmed inflation would remain, rates will remain unchanged, at least for the next couple of months. If we have an uptick in inflation in the UK in July, of course, things will change. Market sentiment will change.
Mark Carney has been doing so many zigzags, flip-flops.
Okay, less than 10 minutes to go. Get ready, warm up. Here we are. Right, it's coming.
Yeah. Do you have any guess if the euro will end the press conference higher or lower?
Oh, sorry. I have.
Do you have any? No.
Any what?
If the euro will end the press conference higher or lower?
Just a bet. Okay. I believe that we are going to go higher. Market does not want to bring back.
Yeah, I think I'm also in agreement. I think the trend is your friend, as they say, and there is room for the upside.
Remember, guys, that once the press conference will start, we are going to shut down our micros. You can hear the conference, and so did us. So do us. But you can refresh the page and follow our live commentaries within the chat, showing the chat, live chat, and there we will be adding headlines. Something interesting happens, letting you know what we think.
Yeah.
Almost there, almost there. Come on, Draghi.
Yeah.
Okay, something to work with.
Still impressed by the weakness of the pound. So again, we had good news in the UK, stronger than expected retail sales, short-lived spike, and then a big crash. For me, that's a big sign of weakness. In euro dollar, it's just looks like a correction.
Oops, up far. But it's holding above that key 40-60 price zone. So
Yeah, I remember that line from 2015. It was
which
not
one?
only the 114.60 euro dollar. Or
Yeah.
looking.
Yeah, weekly, early 2015, January, as you can see. And only a couple of spikes above that area, being quickly reversed, of course. This is the weekly chart. Almost there. Almost there. Come on, Super Mario.
Yeah. Doesn't begin exactly on time, so
Never.
always those regular jokes about being Italian and things like that.
I'm
Italians are
part
never. Yeah.
and I'm obsessed with things going on time. Always.
Yeah. So we have a few more minutes.
Yeah. A lot of bayonets.
Yeah. I just saw a headline that the price of Brent crude oil,
yes,
is about $50. I usually follow only WTI, but yeah, everybody's waiting Draghi.
I hope this is not one of those days that I check more my bottom than my charts.
114.92, very stable euro, awaiting press conference by Mario Draghi.
Three minutes, yes.
Yeah.
1 minute, sorry.
Yeah, we're getting some US figures. All set. So US jobless claims dropped to 233,000.
Okay.
A bit better than expected. And the Philly Fed Manufacturing Index, still don't have that.
Hey guys, remember that if you want to follow our commentaries live, you can refresh the coverage page and join the live chat. We are going to go through the chat now when Super Mario starts talking, so you can hear him, but not us.
Yeah, let's see if it's a Draghi drag or a big Mario move to the upside. Philly Fed Manufacturing Index dropped to 19.5, worse than expected, but jobless claims came out better than expected, and in any case, the big event is Draghi.
Little market reaction to our news. Okay. Yes. In.
Should begin any second now.
Over the ECB does not have problems sharing the video as they did the last time. Clearly, 2 minutes late. He didn't get in already. Still late as usual.
Yeah, problem with the elevators. Yeah.
Yeah, I would start making stat on whether if he gets in later or earlier, if that has meaning.
He doesn't feel like talking to those nasty reporters.
Yeah.
Yeah, so I don't know why there is some kind of a delay.
Yep, seems so. Okay, he's coming. Remember, guys? Yes, we are going to mute our mics. Remember to refresh the page and join the live chat. We are going to be there for a while now.
Yeah.
Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President Valdis Dombrovskis. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We expect them to remain at their present levels for an extended period of time and well past the horizon of our net asset purchases. Regarding non-standard monetary policy measures, we confirm that our net asset purchases at the current monthly pace of 60 billion euro are intended to run until the end of December 2017 or beyond if necessary, and in any case, until the Governing Council sees a sustained adjustment in the path of inflation consistent with its inflation aim. The net purchases are made alongside reinvestments of the principal payments from maturing securities purchased under the asset purchase program. Our monetary policy measures have continued to secure the very supportive financing conditions that are necessary to make continuous progress towards a sustained convergence of inflation rates to levels below but close to 2% over the medium term. The incoming information confirms a continued strengthening of the economic expansion in the euro area, which has been broadening across sectors and regions. The risks to growth outlook are broadly balanced. While the ongoing economic expansion provides confidence that inflation will gradually head to levels in line with our inflation aim, it has yet to translate into stronger inflation dynamics. Headline inflation is dampened by the weakness in energy prices. Moreover, measures of underlying inflation remain overall at subdued levels. Therefore, a very substantial degree of monetary accommodation is still needed for underlying inflation pressures to gradually build up and support headline inflation developments in the medium term. If the outlook becomes less favorable, or if financial conditions become inconsistent with further progress towards a sustained adjustment in the path of inflation, we stand ready to increase our asset purchase program in terms of size and/or duration. Let me now explain our assessment in greater detail, starting with the economic analysis. Euro area real GDP increased by 0.6% quarter-on-quarter in the first quarter of 2017, after 0.5% in the last quarter of 2016. Incoming data, notably survey results, continue to point to solid, broad-based growth in the period ahead. The pass-through of our monetary policy measures is supporting domestic demand and has facilitated the deleveraging process. The recovery in investment continues to benefit from very favorable financing conditions and improvements in corporate profitability. Private consumption is supported by employment gains, which are also benefiting from past labor market reforms and by increasing household wealth. Moreover, the global recovery should increasingly lend support to trade and euro area exports. However, economic growth prospects continue to be dampened by a slow pace of implementation of structural reforms, particularly in product markets, and by remaining balance sheet adjustment needs in a number of sectors, notwithstanding ongoing improvements. The risks surrounding the euro area growth outlook are broadly balanced. On the one hand, the current positive cyclical momentum increases the chances of a stronger than expected economic upswing. On the other hand, downside risks primarily relating to global factors continue to exist. Euro area annual HICP inflation was 1.3% in June, down slightly from 1.4% in May, mainly due to lower energy price inflation. Looking ahead, on the basis of current futures price for oil, headline inflation is likely to remain around current levels in the coming months. At the same time, measures of underlying inflation remain low and have yet to show convincing signs of a pickup, as domestic cost pressures, including wage growth, are still subdued. Underlying inflation in the euro area is expected to rise only gradually over the medium term, supported by our monetary policy measures, the continuing economic expansion, and the corresponding gradual absorption of economic slack. Turning to the monetary analysis, broad money M3 continues to expand at a robust pace with an annual rate of growth of 5% in May 2017 after 4.9% in April. As in previous months, annual growth in M3 was mainly supported by its most liquid components, with a narrow monetary aggregate, M1, expanding at an annual rate of 9.3% in May 2017, unchanged from April. The recovery in the growth of loans to the private sector observed since the beginning of 2014 is proceeding. The annual growth rate of loans to non-financial corporations remained stable at 2.4% in May 2017, while the annual growth rate of loans to households increased to 2.6 from 2.4 in April. The Euro Area Bank Lending Survey for the second quarter of 2017 indicates that credit standards for loans to enterprises and loans to households for house purchase have further eased, and that loan growth continues to be supported by increased demand. The pass-through of the monetary policy measures put in place since June 2014 continues to significantly support borrowing conditions for firms and households and credit flows across the euro area. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirm the need for a continued, very substantial degree of monetary accommodation to secure a sustained return of inflation rates towards the levels that are below but close to 2%. In order to reap the full benefits from our monetary policy measures, other policy areas must contribute decisively to strengthening the long-term growth potential and reducing vulnerabilities. The implementation of structural reforms needs to be substantially stepped up to increase resilience, reduce structural unemployment, and boost productivity growth. Regarding fiscal policies, all countries would benefit from intensifying efforts towards achieving a more growth-friendly composition of public finances. A full, transparent, and consistent implementation of the Stability and Growth Pact and of the macroeconomic imbalances procedure over time and across countries remains essential to bolster the resilience of the euro area economy. We are now at your disposal for questions.
Piotr Skolimowski, Bloomberg. Mr. President, could you give us a bit of a flavor of the discussion at today's meeting? Mainly, have you held any formal talks about your strategy for the asset purchase program after the December this year? And my second question is more on the follow-up from your Sintra speech. We've seen euro strengthen on a trade-weighted basis to its highest level since end of 2014. Well, you used to highlight your concerns about the impact this might have, a strengthening currency for inflation. So from that standpoint, are you concerned that the gains in the currency are already so excessive? Thank you.
Thank you. Well, let me respond first to your first question and give you a sense of the discussion we had today. We reviewed the economic developments in the euro area, economic and financial developments in the euro area, where we took stock of the continuing improvement in growth momentum, but also of the fact that the inflation rate is still subdued, and really there isn't any convincing sign of pickup for underlying inflation, while noting that the headline inflation will still be fairly volatile in the coming months. there was a general reiteration of the point that convergence of the inflation to our objectives remains conditional upon the very substantial monetary accommodation that is now in place. So all in all, one could try to sort of summarize the exchange, saying that it was around the concepts that we've expanded on other occasions, like concepts of confidence that is basically generated by the growth momentum, but also by the fact that we need to be persistent and patient, because we aren't there yet, and prudent. Now, your second question, by the way, we also were, let me say, unanimous in communicating no change to the forward guidance. And also, we were unanimous in setting no precise date for when to discuss changes in the future. In other words, we simply said that our discussions should take place in the fall or in the autumn, since we are in Europe. Now, concerning your second question, it's true there have been movements in bond price, asset prices, exchange rates, and so on. Let me go through this, but the conclusion is that the financing conditions remain broadly supportive to secure a sustained return of inflation rates towards our inflation aim. Now, long-term yields have risen, but they still are low by historical standards. Sovereign spreads have tightened, and some issuers have seen even falling rates. The corporate bond spreads have continued to decline. The 10-year GDP weighted average of euro area sovereign yields stands close to its level at the beginning of the year. Bank lending rates continue to be at very supportive levels. And the bank lending survey suggests that banks expect a further net easing of their credit standards across all loan categories in the third quarter. The repricing of the exchange rate has received some attention during the various exchanges and in various ways, but that's something that's been, just as I said, has received some attention.
Alessandro Merli of Il Sole 24 Ore. As my colleague mentioned, there was a sharp reaction from financial markets to your Sintra speech. You must have looked at the Fed experience of 2013. Is there any concern in the Governing Council that the so-called tantrum or similar reaction can happen in the Eurozone while you start discussing changes in your stance?
Thank you. I won't comment, of course, on market reactions, but let me just give you the bottom line of our exchanges. Is that basically inflation is not where we want it to be and where it should be. Now, we are certainly confident that it will gradually get there, but isn't there yet. And that's why the Governing Council reiterated the forward guidance, the asset purchase program, the interest rates, and all this package of monetary accommodation, and reiterated that that the present very substantial monetary accommodation is still necessary. Let me read the introductory statement. Is still needed, therefore, a very substantial degree of monetary accommodation is still needed for underlying inflation pressures to gradually build up and support headline inflation developments in the medium term. So that was the, but let me just make clear one thing, that I mean, after a long time, we are finally experiencing a robust recovery where we only have to wait for wages and prices to follow course to our objective, to move towards our objective. Now, the last thing that the Governing Council may want is actually an unwanted tightening of the financing conditions that either slows down this process or may even jeopardize it. And that's why we retained the second bias, or let's call it reaction function. If the outlook becomes less favorable, or if financial conditions become inconsistent with further progress towards a sustained adjustment in the path of inflation, we stand ready to increase our asset purchase program in terms of size and or duration. And I think the Governing Council has given enough evidence that when flexibility is needed to achieve its objectives, has been very able to find all that was needed to. So that's why we keep this bias. Thank you.
John? Thank you. Claire Jones, Financial Times. Mr. Draghi, your remarks on inflation today seem to be rowing back a little on what you said in Sintra. In Sintra, my impression was that you seemed quite confident that reflationary pressures were starting to re-emerge and that the weakness in inflation would be temporary. Today, you're saying that you see no sign of a pickup in headline inflation. So can you maybe just explain a little bit how we get to a point where we do see these reflationary pressures when you're saying there's no signs of it yet? And then for my second question, it seems from what you're saying today too that the exchange rate and also the jump in government borrowing costs is having some impact on your thinking of what you're going to do in 2018. But we've also seen from the reaction to your speech in Sintra and also to the taper tantrum in the US that it can be very difficult to control bond markets. How do you see the ECB being able to do this, and would you consider doing something similar to the Bank of Japan, where there is an attempt to manage the yield curve quite carefully and directly? Thank you.
Thank you. Well, I reviewed the financial markets developments a moment ago, and I think I put them in the proper context, but nothing like BOJ's was discussed. Let me, however, comment on your parallel with Sintra's speech. Our assessment is that what I've just said, and Sintra and Tallinn, because we have to go back to that, and the Q&A and this introductory statements, aren't very different. On all occasions, what we did was to basically take stock of the unquestionable improvement in the growth outlook in the euro area. Then we asked ourselves the question, why isn't this showing up into a higher inflation rate, a headline and underlying inflation? And we went through a series of reasons that have to do with the labor market, have to do with backward-looking negotiations for wage negotiations, and other have to do with productivity. And in Sintra, this analysis was quite broad, quite detailed. And then we said, are these factors going to be permanent or temporary? We said, well, they're going to last some time, that's for sure. But probably they're not permanent, because as the economic recovery improves and the growth outlook improves, all these reasons will lose some of their effect. In other words, for example, the labor market slack may be bigger than previously estimated, but as the economic situation and growth improves, so will the labor market, and this will be absorbed, and so on for all these various reasons. We think, I mean, nobody can be 100% sure, but we think that it's going to take time, but in the end, although, as I said, nobody can be absolutely sure about that, but in the end, these reasons will lose some of their effects. Then we said, are we there? And the answer was no, we aren't there yet. And that's why in Sintra, I used repeatedly the concept of, together with confidence that in the end we'll get there, the concept of persistence or patience. Persistence in keeping the current stimulus in place. Stimulus upon which all the path of inflation is projected is conditional. So that is the sense that then we said, of course, our monetary policy will accompany the recovery, and that is, I believe it's not only in Sintra but also in Tallinn, certainly today. And so all this says basically that the ECB, first of all, says that the Governing Council trusts the strength and the power of its monetary package in all its elements. Second, it says that the Governing Council is ready to use the flexibility that is needed to make true its monetary policy package. And third, it says that the ECB will stay in the market for a long time. So in conclusion, I'm not sure I see big differences. Much was made of the word reflation. By the way, reflation means you have reflation when the price level recovers from it's fallen below the trend line and it recovers. So it recovers from below the trend line. That's the technical definition of reflation. And so in the speech in Sintra and before, it says that reflation has replaced deflation, or risks of deflation, really better. So no big differences.
Is that? Nette Weisbach, CNBC. I have a general question of how confident are you that it's actually possible to withdraw that extraordinary stimulus without creating volatility at all? Are you confident that such a smooth sort of transition is actually possible? Second question would be on Greece. Greece is very hopeful to tap the markets, to go back to the markets, I should say, to sell debt. How confident are you that the ECB will also will be buying government bonds from Greece going forward? Thank you.
Thank you. Yes, we are confident that this process can be brought forward in a smooth way, and so we see our program proceeding in a smooth fashion. As I said, the Governing Council has given enough evidence in the past that it can actually use all the flexibility that is needed. On your second point, we've gone through this several times. First of all, the third review must be completed. The Greek government has decided to, as you said, to tap the market. And of course, it's up to the government to decide about this. The sound implementation of the program and credibility are essential, however, for restoring market confidence. And we have to take note that the National Central Bank has expressed some concern about that. Although there has been serious progress in place in Greece all throughout the last several months. But issuance, the way we see this is the issuance activity should be part of an overall strategy where you have the completion of the third program and also the return to the market. It should be in a lasting way. So it's premature to talk about other things and what you suggested, or also other programs. Thank you.
Mr. Jakic?
Klaus-Rainer Jakic, ARD German Television. Mr. President, please let me again touch on your Sintra speech and on the explanations you've given today. would you say that there has been perhaps in parts of the economic and financial world a kind of misinterpretation of what you have said in Sintra? And secondly, in the wake of this speech, but also before, in some parts of the markets, there have been demands that it perhaps would be wise and sensible that the ECB would put forward a kind of roadmap, a kind of timetable concerning, of course, tapering, but also concerning possible changes in general monetary policy. Would you say that something like this would be helpful? Thank you.
Thank you. Well, on the first question, I never ever comment on market developments. On the second question, this is exactly what is going to be the substance of our discussion in the fall. So the answer is yes. Yes, the ECB considers it useful, important, essential, and that's the sort of discussions we'll be having in the fall. Thank you.
Mr. Canepa?
Francesco Canepa, Reuters. My first question is about technical work. Have you asked ECB staff to start looking into the technical options for QE beyond December, just at the technical level? The second question is slightly different. 5 appointments inside the ECB were annulled over the past year, and now the appointment of your own advisor is being challenged in court. What do you intend to do to improve hiring practices in the institution?
Well, first answer is no. It's not being discussed. They've not been tasked. The second answer is, well, I mean, really, in a sense, we are thankful to the staff committee and IPSO when they address mistakes that we, like everybody else, make. Sometimes their concerns are right, sometimes they're not. And so now we proceed in this way. Now, I sincerely wish to work, not only I, but also the board members and senior management wish to work with the staff committee and IPSO. The problem is that it's very difficult to have, trust is a two-way route where it's very difficult to trust someone who discusses things on the press and the news wires and so on each and every time. And frankly, also for the staff, which is a staff of a world-class quality, to be seen in the press as being sort of continuously discussed is a little sad. So I think that what should be improved, perhaps on both sides, is the way to work together. Not necessarily our hiring practices, which, as I said, when they need correction, we correct them without hesitation. Thank you.
Mr. Bondaman?
Thank you. Mr. President, can I ask you, you also said in the Sintra speech that as the economy continues to recover, a constant policy stance will become more accommodative. So it looks like the economy will continue to recover even more. You also said that the Governing Council will likely discuss changes in autumn. So do you view it as likely that a change in the monetary stance in autumn will be necessary? Thank you.
Well, you see, that's exactly why we are having this discussion in autumn, and why we didn't want to set a precise date, because we have to have all the available information at that point in time, which we'll certainly have by then. It's going to be a discussion which is made up of different parts. We don't look only at the growth recovery, of course, in assessing whether the monetary policy stance is appropriate or not. We also have to look at first and foremost, we have to look at the path of inflation, whether it converges in a sustainable and self-sustained manner to our objective. And that's why I said before, if we are to experience, in the presence of this recovery, of this growth recovery, if we are to experience an unwanted tightening of financing conditions that may jeopardize the convergence in the medium term of our inflation to our objectives, then we'll have to act, and we'll have to use the inflation bias and other measures as well. That's why this discussion we're going to have in the fall is multifaceted. Thank you.
Mr. Malin?
Thank you, Jan Malin from Handelsblatt. Mr. President, would it be possible that the ECB, for example, takes a general decision on a reduction of the bond purchases first, and then maybe or quite early, and then decides on the modalities of the purchases later? Would that be an option, maybe? And my second question, you've said that there's no convincing sign of a pickup inflation yet. For example, wage growth hasn't picked up yet. Have maybe the fundamentals also changed after the financial crisis, the relations between growth and wages and inflation, or would you or is a convincing sign only if wages really pick up? Thank you.
The answer to the first question is we haven't discussed that. The second question is really asks whether something has changed following the financial crisis, so that the response of wages to an improvement in the labor market is different from what it was in the past, before the crisis. And the answer is yes, certainly. It has changed, and there's a variety of factors why this has changed that I went through explicitly during my speech in Sintra, but as well on other occasions. And these are profound changes. Now, the key issues for us is, are they going to be permanent or structural, or in the end, we will go back to a sort of relationship between the labor market, between unemployment and wage growth, like we have in the past. And the conclusion we draw, as I said, with great caution, however, because it's not something where one can be 100% sure. The conclusion we drew is that in the end, yes, we will go back to a relationship like we had before the crisis. Now, I focused on the labor market, but in fact, there are other reasons why this response may be delayed. For example, the leveraging process is another reason why this is lower than you would have in normal times. In general, after a protracted financial crisis and a long recession like we had, you would expect phenomena like hysteresis, phenomena like, as I said, backward-looking wage negotiations, like the deleveraging. So it's a variety of phenomena. Some of them have to do with the labor market, others don't. But all throughout, we are confident, we are moving through. But it's a combination of confidence and prudence and patience. Thank you.
Joanna Drake, Politico. Mr. Draghi, so you said you haven't tasked the committees yet to prepare options for an exit. So what are the chances that at your next policy meeting you actually have concrete options on the table that you could discuss and take a decision on? Or would you only task committees to prepare options after you had your initial discussions on a possible exit in the autumn? And my second question is, you've highlighted the Governing Council's flexibility. What do you think are the chances at this point that you would have to change the parameters or the rules of the QE program again to ensure that there are sufficient assets to buy?
Thank you very much.
Thank you. I'm sorry, but the answer to the second question is we haven't discussed that, and to the first as well. We haven't discussed what we are going to do in view of September, and or even less so, what we're going to do after September. There was as I said, it was a unanimous conclusion. Exactly. Don't set dates. We need to think. We need to have lots of information we don't have today. There is a lot of uncertainty around, so the Governing Council didn't want to be sort of forced to take decisions in absence of full information.
Mr. Daniels?
Good afternoon. Harry Daniels from Large Squawk News. Just a couple of questions, really. Firstly, on the inflation picture at the moment, with all the QE we've already seen pumped through the system, is it time to look at the inflation target and the real underlying rate of inflation within the Eurozone? And secondly, with regards to capital keys and the fact that for the third month in a row now that Germany has fallen below that, or the purchases for Germany have fallen below that, price and availability of credit on the corporate side possibly make that more attractive for the programme. Has this been discussed or considered?
I'm sorry. Can you repeat both questions?
Right. Okay. For the first one, the inflation picture, is it time to look at the inflation target? Has that been discussed? You know, we've had all this QE pumped through the system. You know, we've done all this extra accommodation, and inflation isn't where it should be, or where the ECB would like it to be. Is that because the target's wrong, or it just there is now because of what we've seen? It's going to take a lot longer to get there. And secondly, on the capital keys and really on the German element to this, would the council look at more corporate debt and purchases as, say, pricing and availability of credit, possibly make this more attractive?
Okay, the answer to the second question is that we haven't discussed that. We haven't discussed that, but as I said, it's just and we gave you enough evidence that that was the case all the times, that when the Governing Council needed flexibility to carry through its monetary policy, it was successful in finding it. On the first point, we didn't actually discuss this, but not this time, but on other occasions we briefly touched upon. The issue is whether we should, basically the answer is, first, the reasons that led all the, to my understanding, central banks, all the major central banks in the world to adopt the 2% objective or around that concept in the early 2000 are still valid. And specifically in the euro area for the ECB are still valid. Second, it's true, our monetary policy measures have been in place now for quite a long time, but they produced very significant effects. We can say that today were created in the last 3 years, if I'm not mistaken, 6 million jobs, much more than any time before the crisis in the same amount of time. All the economic sentiment indicators, the survey indicators are either at all-time high or close to that. So the policies have been unquestionably successful on the real side of the economy, and it's the response to in terms of inflation, which we are still waiting for and looking and monitoring and that's what. So the answer to that is we've got to be patient rather than changing the objective. Also, if you kind of ask yourself how credible is anybody really, an individual or an institution, then when it doesn't attain the objective, changes it, and it makes it attainable, changing the definition. So by the way, the whole reason it could be done the other way around. So if we had inflation of 4% and we want to bring it down, then we decide that 4% is the new objective. So it's not very credible. Finally, I think that to even discuss changing objectives at this point in time would be destabilizing for the expectations. It would be highly destabilizing.
And we have one question for Mr. Perez, and then the final question for Mr. Yohay.
Thank you. Mr. Draghi, what kind of new information would you need to see between now and the fall for you to convince the ECB that something needed to be adjusted in terms of the stimulus? Would you need to see an upward revision in inflation, for instance, or in the economic forecasts? Or would it be sufficient if it was just consistent, if growth just continued the way it's expected to do? My second question is, does September 7th count as the fall? Thanks.
Sorry, my second question is?
Count as the autumn.
Well, if the Governing Council had decided to define autumn as September 7th, they probably said September 7th is going to be when we'll decide. So it's going to be deliberately kept open. Your other question, what information? It isn't that we are looking for a specific data point which triggers one behavior or another. In September, we'll be having the macroeconomic projections. We'll be having staff macroeconomic projections. So there's more information that we can look at between now and then. And so it's basically the sense of the Governing Council that would have more confidence in taking a decision with more information than we have today.
Jack Ewing, New York Times. Mr. Draghi, you said during the opening statement that the recovery has been broadening across sectors and regions. I'm just wondering, I mean, it's obvious that there's still some trouble spots, still some areas that have high unemployment or credit is difficult to find. How much does that play into your thinking? How broad does the recovery have to be before you're going to feel confident about perhaps removing some of the accommodation? And then a related question, how confident are you that some areas that have been benefiting from the accommodation can sort of stand on their own once conditions go back to normal? Thank you.
Thank you. Your question actually reminds all of us that what we say about growth momentum, strong recovery is an average. That in fact, as you said, there are spots which haven't seen such a great recovery. And they, in a sense, don't appear when we give this average aggregate description. That is something that should always be kept in mind. When we say that we created jobs and the labor market is improving, no question, that's true in the aggregate, but still that doesn't deny the presence of areas where slack remains significant and unemployment and youth unemployment especially remains significant. Now, having said that, we should always remember that our mandate is neither growth nor employment, but it's price stability. And that's where our monetary policy is geared for, and that's what we have to look at in terms of deciding whether we've actually moving successfully. I think that's my answer. Sorry, your second question was?
Just whether you're worried that some areas that have benefited from accommodation might backslide or might prove unable to sort of stand on their own when the accommodation is not there, or not in the same volume.
Again, in a sense, it goes beyond our remit. We have to take this into account in our minds, but our remit is the one of price stability. And that's what we have to what we have to look at, and we have to aim our policy action to that objective.
Thank you very much.
Thank you.
Okay. Quite interesting.
Here, Nico. Okay, press conference ends. Euro-dollar is up something like 60, 70 pips. Valeria? Can't hear Valeria.
What?
I hope you can. Now I can hear you.
Okay, sorry. Okay, I would say that over almost 100 pips up after Draghi said the hit from low, I mean, right? After he offered promising kickstart to the press conference that economy strengthened, broad recovery. And as we discussed ahead of the meeting, the market ignored the negative headlines within the statement, right? Because Draghi added that very sustainable commission still needed. He talked about inflation not being there yet, and a lot of other things that yet the market to ignore, right?
Yeah. So basically, yeah, I said they deliberately decided not to tell us when and not to change the communication. And he tried, yeah, he told us that they want to, that they're trying to communicate that they haven't made any decision. Growth is good, but inflation is weak. But the message is, yes, of course, we'll talk about tapering in
next time
in the spring. And is it September or October? He said, well, we left it open, but you know, in September we get new forecasts. So I would say he did his best efforts. But when you find yourself explaining the communication, it means that the communication didn't work that well. And yeah, you can see that in the markets.
Yeah. Anyway, I would say that to wrap up this coverage, the fact is that, as we discussed earlier, the market was looking for an excuse to buy the euro. My take is that, in fact, he did a good job preventing the common currency from rallying strongly with the headlines, right? Remarking multiple times, as you were saying, that they will discuss it, but not yet, and refusing to give a certain date, despite being multiple times asked about it. I guess every single journal is the same. When it's the fall, when it's fall. So it's pretty funny on the side. Anyway, and for the market, this means further euro gains. Despite dollars not weakening across the board as much as against the euro, the fact is that the market doesn't like the greenback these days. Okay. And somehow Draghi said, yeah, we are going to discuss this, as he said. We're going to discuss it at that point and before year end. So here we are. The pair stalled below its yearly high, but not far away, and it's clearly well above 115. So beware, guys, that the rally may extend above this high. Remember those two highs we have in 2016 and 2015 at 1.1615 and 1.1713, right? 100 pips distance in between those as being the next probable bullish targets should the price break above this high. Okay. Wall Street not yet open, so well, let's see how the stocks develop, but pretty much the euro dollar is bullish as the market got what it wanted, right?
Yeah, I think that maybe in the next round that the dollar weakens, we can see euro dollar breaking above the recent high of 115.80, and yeah, going towards the levels that you mentioned. All in all, he tried to deny it, but tapering is coming, winter is coming, fall is coming.
Yes, fall is coming, winter is coming, and tapering is coming, everything.
Yeah, and markets speculate and move before things actually happen. So here we are.
Okay. Well, thank you, Yohay, for spending this time. As usual, it's a pleasure. Thank you guys for being there and hearing us talking, and thank you, the FXStreet team in the background, doing all that technical stuff required to keep us live. So thank you, and see you all next week, right? Yohay, we're going to go with the Fed next Wednesday.
I think I'll be off, but maybe I'll be able to join in.
Okay, no problem. Okay. Well, anyway, I will be here all on my own. Thank you all. Bye bye. See you soon.
Thank you. Bye bye.
Bye bye.